Once again, good morning, good afternoon, good evening, wherever you are. And thank you for joining us in this informative session for Qona Sacco. As a way of just getting to know where you're coming from, please just inform us through the chat where you're reporting from. Whichever country you're in, we value you as our member. We'll just take a minute to just confirm. Edward, thank you. I can see you're reporting from Kenya, Nairobi. I can see Ruspa from Mamlaka. Jalo from, okay, the comments are coming in. Narok, I can see. Yes, thank you very much. Thank you very much. And it's a great pleasure to have you on board for this informative session. So just to keep a bit of house rules, we'd like to confirm if in case of any questions that may arise out of this presentation, please shoot your questions through the Q&A session. And so to start us off, importantly, there are two main things in the agenda. The first one is we're going to have the updates from the CEO, the latest Sacco updates from the CEO. And the second one is that we're going to have a presentation which will enable us to demystify the Sacco Societies Amendment Bill of 2025. And we have a speaker by the name of Sane Ole Apale, and who is an experienced presenter in the Sacco industry. So we look forward for you to hang along in this presentation, and we thank you and hope that you will have a great benefit from this presentation. So without further ado, allow me to invite the CEO to make updates for the members' knowledge. Thank you. Judith, you can proceed.
Hello, all members. Good afternoon, good evening from whichever part of the country or on the globe you're joining us from. My name is Judith Denga, the acting CEO at Qona Sacco. Mine is just an update in regards to what Qona is cooking. There are good things that are coming, and we want to ensure that we at least inform the members so that they are aware, and at least also preempt what is coming. This will be followed by a presentation on the bill by Sane, who is with us. So allow me just take you through the updates on the webinar, as well as also the good things that are coming in. So as Qona Sacco, there are things we have been cooking for you, and I'll be able to give my brief in regards to building the wealth at Qona Sacco, whereby we can be able to build the wealth together. Also take you through what we have been doing. My updates will just be in 4 key pillars, then we can be able now to move to the main agenda. So number 1, we have been working on membership categorization, whereby we have divided our membership into 3 cadres. We have the Inuka members, we have the SeedQ members, and we have the Crown members. And I'll take you through through the journey on why they were built, which members are they accommodating, at what age, what are the loan limits, what are the terms, and so forth. And then I'll also take you through an ambitious growth goal that we have called the Mlete Ndani, whereby we are revamping our Mlete Ndani campaigns. I'm sure members are aware of what we've been doing with the Mlete Ndani, whereby if you introduce a member, you get a 500 shilling referral fee. And we want to amplify it by having a Rafiki bonus. We dub it as Sisi ni Qona. So I'll be able to take you through it, and we'll be able to now engage on how to be onboarded and how to bring in your loved ones to the Sacco and the goodies that come with it. Also, I'll take you through a product revamp. We've been working on reviews on products just to strengthen the Sacco in terms of returns to members, and also cover members with given the tough economic times, just to push on members and also inform you that we're here for you. We're also working on the Qona member onboarding app, which is currently still being as well as the mobile banking app. So we're also in the process of also acquiring a new mobile banking app, just to have the process seamless. Also be able to accommodate members in terms of the utilization aspects to the app, which other value add can you have apart from transacting on the app and so forth. So karibu sana members, let me just take you through it. Hope you can view my slides. Let me just confirm if my slides are visible.
Yes, yes.
Right. Sorry for that. I was not aware my slides are not visible. Okay. So I mentioned that I'll take you through on the reasons why we categorize our membership into 3 different categories. The Kenya Sacco environment is changing, and we have also to change very fast given the dynamics that comes to it. Today's youngest membership think differently. They want to build wealth on their own terms and from the way they know best. So this applies on a day-to-day savings, and as well as also different journeys that we have. So what happens is that we have different categories of members from 19 years all the way to 80 years. But the same onboarding methodology the Sacco has been having has been phased out, and members cannot be able to join the same way the traditional model of Saccos has been. So we've been able to segment different buckets and been able to have the same different journeys for different members of the Sacco, whereby we can be able now to have at least different model whereby we can have a member who is 19 years old to 45 years old joining differently, and they're able to build wealth by creating 3 different flows that helps towards achieving their journey, their financial journey, and also building wealth in the long run. So what are these wealth ladders? So we have 3 doors as I mentioned, but they all lead to wealth, because definitely what we need to build as citizens of the nation, we need to build wealth, and we need to build the culture as soon as possible. So what we're doing is that the bucket that I had mentioned, we have the Inuka. Let me just break it down. This is mainly accommodating the university students between 18 to 24 years. This is their first door into the Sacco membership, whereby we'll be engaging students from campus regions. At least we have a door where a student from campus can be able to join and be able to. So this will really be impactful with regards to allowing members to be able to join straight from campus. So we didn't have a product that could accommodate this bucket. Having a share capital of 10,000 was far fetched. Having a minimum deposits of 1,000 was far fetched from the company, whereby we were going through the different buckets of membership that we were able to develop. We had the Inuka, whereby we were pushing to accommodate the members who are still on campus between 18 to 24 years. This is basically the first door to the Sacco membership, whereby we accommodate shares capital of up to a minimum of 10,000, minimum deposits up to 1,000 shillings, registration fee at 500, and then loan limits at 100,000. So currently with the membership we have, we cannot be able to accommodate members who are requesting for a minimum share capital of 10,000, as well as also monthly deposits of 1,000 and registration fee of 100 shillings. So this particular door will be able to accommodate our campus brothers and sisters, and we can be able to push in terms of having members referring their relatives, brothers and sisters, their neighbors, their friends who are still in the university to be able to join. This will also come with the rewards, which will also take the members through the Rafiki bonus. The seed queue is for Gen Z professionals and graduates. This is built for early career and wealth building, whereby we'll have share capital of 20,000, minimum monthly deposits of 1,500, registration fee of 500 shillings, and then loan limit will be at 500,000. So this will be basically for Gen Zs who are professional, graduated, and transitioning to the working bracket. Then we'll have the Crown membership, which is the current membership, which is the normal share capital of 40,000, minimum monthly deposits of 3,000, registration fee of 1,000, and loan limits is up to 100 million. So also we encourage members who are currently on the same bracket
on the Crown bracket to be able to apply for loans. We'll be able to support and also disburse subject to eligibility up to 100 million. So those are the 4 doors to the wealth ladder. So how do we transition in terms of moving from one ladder to the next? The categories isn't about just pushing on numbers, but it's about giving every member a next step to grow. So once you join the Inuka student bracket, you'll be able to move to graduate to the QSEED, then graduate to the Crown. So basically, this is in regards to one for the Inuka group is for financial inclusion, which we are able to at least support our young Kenyan members on the lower to attract wealth and to build wealth. And even before the bank poach them, we are able to go to our campus campus or universities and be able to onboard them. Retention by design, this is basically once we onboard them on the Inuka bracket, now we are able now to issue loans which are geared towards their career growth, and also start educating them in regards to building of wealth. Then once they grow and they move to the Crown, we're able to now build up the wealth foundation, then build it up by not just issuing credit, but also real capital investment. We also educate them. We also scale up on their membership in regards to how they can not only take up loans, but also have other financial knowledge on Saccos and also early engagements on wealth creation. So on the next update was the ambitious growth, which is for onboarding new members. Currently, we have the Mletendani, which is at 500 shillings on referral. We are now revamping to the Rafiki bonus, which will be bigger, have better rewards for you and your Rafiki. So this is basically to be able to recruit more members ever than before, powered by the people who already trust you the most. So ours is just to reward. So how will the Rafiki bonus work? A simple overview, which will be in terms of the follow through in regards to number 1. When you refer Rafiki, this could be a friend, a family member, a colleague to join under your name. So you'll be able to have a section whereby you're able to issue a referral code. Then we'll be able to know the members that you've been able to refer. Your Rafiki completion membership will be able to be done under either Inuka, SeedQ, or Crown. So depending on which category of membership the particular members you've referred to will fall in, we'll be able to categorize them on the 3 doors. Then you'll be able to earn. You can receive a deposit bonus, a cash bonus, and so forth. Then you will climb to there'll be a leaderboard whereby we can be able to see who is the best referral member who has been able to refer most members, and there'll be prizes. There'll be a mbuzi, there'll be a holiday. So this, once we launch, we'll be able now to amplify in regards to how different members will be able to benefit up to X referral. This you'll either win a mbuzi or a holiday, and this is basically geared towards the members you onboard. So on my 3rd update is the revamp of the Qona products. So we, as I mentioned, that we are engineering our product line around 2 goals at once. This is basically strengthening the Sacco's interest income so that we can stay financially sound for a longer term, as well as also easing the pressure to members given the tough economic environment now. So these are not basically competing goals, but a stronger Sacco that can make members really be able to be dependent on the Sacco, whereby the Sacco is reliable vehicle of investment, as well as also sustainability to members. So basically, those will be the 2 goals, basically to grow interest income so that we are financially strong and remain competitive in the market, keep loan limits growing, keep investments growing, keep products changing to be able to cover the wealth building journey. So this is not just a project. We are here to move with you, and also to hear, we are hearing you, so that we can be able now to support you through this journey. In terms of easing members' pressure, we know that there's tough economic pressure, environment, as I mentioned. So our product will just be to revamp the current existing tenors that we have, either reducing the tenor, and also increasing the tenor, and also supporting in terms of flexible ways of savings, as well as also flexible payment terms. The fourth one is as I mentioned, we are launching the Qona member onboarding app and the new mobile banking app, which is a good news to us. We want to make the process seamless. When you're onboarding your Rafiki, when you're onboarding any friend or colleague, we want to make the process very seamless. Just tap a button, move to the next step, comply with 1 or 2 documents, then voila, you're in. So we want to make the process seamless. So we are putting the Sacco into your pocket. The new Sacco Qona member app will let members join, save, borrow, track your wealth without even visiting the branch. So that's what we want to do, to scan your documents on your phone, to just take a selfie, and then just move to the next step, and voila, you're in. And your Rafiki bonus is also automatically paid to your FOSA. So there'll be no paperwork, no queues, no branch visits, just a few taps to become a member. So we are looking forward to that, and we are very excited to be able to make the onboarding process seamless. For existing members, we're also looking at your wealth, having your wealth at your hand. The new mobile banking app will also be supporting in regards to having a seamless process, whether you're transacting, whether you're updating your KYC documents, whether you're applying for loans. So we'll also have a mobile banking app where you can be able to apply for even normal loans, other than the normal bank mobile loans that you have. We'll also scale it up to be able to apply for loans like development loans, long-term loans, in short, premium loans on your phone. So that's what we're looking at, and giving members a very, very seamless experience when applying for the particular products. So today will just be one step towards informing you what is happening, and I'm glad that at least members have joined, just to see what we have in store for you. Just to tell you what is coming around the corner: Rafiki bonus, where you'll be able to refer your relatives, your friends, the product revamp, which products are coming, how will they be consumed, what will they be covering, and so forth. And the new member app, what will you be enjoying, how seamless the process will be, and so forth. That's it from me. Asante sana. This is your home of wealth, and I appreciate the good turnout in terms of membership. I'll now be able to invite my colleague Sani, who will be taking us to the amendment, the Sacco Societies Amendment Bill 2025. Then we'll have questions after that. Thank you very much, and I look forward to an engaging session. Have a good session.
I want to appreciate everyone who has joined from all over the country, all over the world, from Portsmouth, from Narok, Makueni. My name is Sane Oleapale. I'm the CEO of Kratis Advisory Limited. And it's a pleasure for me to come and have a conversation with the members of Qona Sacco about what this Sacco Societies Amendment Bill is all about. Why is it here? What is it all about? How is it impacting us as Qona? And then we can be able to proceed and answer a few questions. We're able to get quite a number of concerns, and we were able to address them in this conversation. Feel free to do your Q&A on the chat, and then the Sacco team will be able to collect all of them, and I can be able to respond to each and every one of them for us to know that we are on the same page. If you're happy to be here and you're interested to learn, let me see a thumbs up as we begin. Now, we have been Sacco members for quite a while. And as we are currently set up as a movement, there are certain challenges we are experiencing when we are trying to transact or bank with our Saccos. And my conversation here is not just about Qona Sacco, but the movement, for you to be able to appreciate and hear and understand. Now, as we speak right now, Qona Sacco cannot issue any financial payment instrument by themselves. Any transfer you make has to be routed or supported by a commercial bank. And as we are set up currently, Qona Sacco can only transact with its members by themselves. So none of us from my Sacco, I cannot transact with any of you who are in Qona unless I am a member of Qona Sacco. And that has prevented us to be able to, as a movement, transact with each other so that our money and liquidity moves around our ecosystem. So we are heavily dependent on banks for us to do business. Any payment instrument we are currently enjoying is being sponsored by a bank. Any check or ATM card we have, it is a bank which is sponsoring the same, and it is more expensive for us to be able to transact through those channels. So this new bill is doing three things, and allow me just to quickly take you through. One, it is letting SACCOs, especially DT SACCOs, become a dominant financial player rather than siloed institutions, because you as a member of Qona Sacco cannot transact with a member of Stima Sacco or Mwalimu Sacco. It is going to finally activate the Deposit Guarantee Fund, which has been dormant and on paper since 2008, and I will speak a little bit more in these next few slides. And it has expanded SASRA's regulatory powers, and it has given it a bit of teeth to bite, especially when people misuse member funds. And in the next few minutes, we will be able to dig in detail what it is all about. So this bill is amending the 2008 Sacco Societies Act. This act created SASRA and gave it the responsibilities to be able to license deposit-taking SACCOs in 2010, govern SACCOs in the later regulations, which came in 2020. It regulates the movement, especially DT, and the non-specified non-deposit-taking SACCOs, and it also supervises those SACCOs. At the moment, there are about 355 which have been licensed or under direct control of SASRA. So there are two regulations that SASRA brought into place. In 2010, it was the deposit-taking regulations, which now gave guidelines for deposit-taking SACCOs like Qona to operate. Then in 2020, they issued further regulations, and they were for specified non-deposit taking. What does it mean, non-deposit taking? These are SACCOs which only offer BOSA services, which means their primary product is loans. Listening to what the CEO has talked about, you guys are offering far much more than just loans. So those SACCOs which have member deposits of 100 million and above, they are a digital SACCO or they are a diaspora SACCO. Those ones are the ones who are being covered by the 2020 regulations. So now this new bill has expanded the power beyond FOSA BOSA to the shared services kind of cooperative society. Please let me know if you can see my presentation. I understand some of you may have a challenge. Please just confirm by a thumbs up that you can see the presentation. Thank you so much. All right, my apologies if you're not able to see the previous slides, but primarily this is a baseline for, and this is how we are moving. This is what the old 2008 bill law is, and that is what is being amended. So our conversation will affect what SASRA does and the scope of what it does. So as a quick recap for those who are not seeing the slides, is the 2010 regulations gave birth to regulations for deposit-taking SACCOs, FOSAs as we know them. Then the 2020 regulations are now for BOSA. Now this new bill is amending the powers and scope of SASRA to make them able to also oversee secondary cooperatives. And in the next few slides, I'll tell you what secondary cooperatives. And we are getting an entity that is going to be a participant in the central bank, which will be able to undertake central liquidity facility, whereby the membership of this secondary cooperative are other primary cooperatives like Qona, Stima, Mwalimu, Olin, or any of the DT SACCOs that we know, about 177 of them. So each of these will be able to remit contributions to this new entity, which will be operating or overseeing a central liquidity facility. Then from that facility, it's going to be able to support the movement on liquidity matters. And I want to share with you what those are. Now, how it is structured in this new amendment bill is it is providing this layered of Sacco cooperatives called secondary transact with primary Saccos. Qona Sacco is a primary Sacco. So primary Saccos are mandated to deal with individuals and legal entities on an individual basis. This secondary cooperative entity cannot deal with you and I as individuals, but it can deal with Qona Sacco if you choose to be able to join the same. The bill provides for this entity to have a minimum of 30, and because it is still under conversation, that can be moderated and advised, and it's going to pool these resources. Now, what happens, or what's going to happen is this. You as a member has direct control and authority over your primary Sacco. At this case is Qona. Nothing changes how you're treated as a member. Nothing changes how you contribute. Nothing changes how you have AGMs and elect your members. Nothing changes how you transact and do business with Qona. And me listening today to see the new changes you're bringing about tiering the different membership, that maintains and that is not changed. There is nothing in this bill that changes how you do business as an entity. So what it is bringing on board is this new additional layer of a secondary corp that does very specific business and does not touch member funds whatsoever. And Qona Sacco will have representation, if you so choose, to be able to sit in that secondary cooperative, to be able to pool services, funds, and shared services. And what are these shared services? This secondary cooperative can be able to pool funds from all member Saccos, only the members who choose to subscribe to it. And they're going to each of them have a liquidity reserve account, and I'll tell you in a few what that's going to do. It's also going to take deposits from member Saccos towards the central liquidity facility, which will be able then to facilitate short-term lending to member Saccos. What does it mean? When Qona Sacco suffers a liquidity shortage and they want to borrow, right now, you can only borrow from commercial banks. Those are expensive. Currently, the way Kenyan banks are set up through the central bank, central bank can be able to lend them short-term liquidity when wamekwama, but more often they recommend or they encourage the Saccos who are playing within the national payment system to lend to each other. So this pooling of resources to the central liquidity facility can help even Saccos lend one another. If Qona Sacco today has excess liquidity and maybe Stima Sacco is short of cash and they need overnight lending, then Qona can be able to provide such kind of facilities. So it's simply being able to enhance the level of playing field within the Kenyan financial space, and it is making Saccos become more dominant and can be able to literally play as commercial banks in this country. The other thing what shared services will be able to provide is this secondary corp will act like an intermediary. And what does this mean? They can be able to support domestic and international transfers. That means you as a member of Qona, you have imported a car from Japan. You don't need to go to the bank to facilitate a transfer. When you come and make an application or through your mobile channels or internet banking, you are making that application. You can send dollars to anyone in the country. For members in the diaspora, this makes a lot of sense because now you transacting with Qona does not need to go through you are in this world directly from your FOSA account here at Qona. You can be able to do business with another FOSA member at Stima Sacco or Kenya Police. That means it's going to help us maintain even liquidity within us because we are not sending money outside. It's going to be able to do trade finance. For those of you who are in business and you are importing things from China, etc., you know for you to be able to do such kind of business, you need things called letters of credit. That means you go to your commercial bank, which give you a letter, which is a commitment to the banker of that seller that you are good for it and they can release the goods to you and they will be paid when the goods. At the moment, there is no Sacco in Kenya that can be able to do that. This bill is simply providing this secondary corp with the powers for it to operate such kind of facilities. It's also going to support interbank market. And what does it mean? Because now this secondary cooperative will operate like a bank, the way ABSA, the way NCBA, the way Co-op operate at central bank, then this secondary co-op can be able to do the same. But this will be in strict compliance with the Central Bank of Kenya. So now if you want to do an RTGS, you don't need to go through a bank. You can do it straight from Qona Sacco. So these are some of the shared services that will be able to be provided by the secondary co-op. And lastly, this secondary co-op, because now it is a pooling of resources by many entities, then you will be able to invest in even core banking systems, whereby smaller SACCOs who cannot afford to buy its own USSD or mobile app, they can be able to provide the same through these shared services, and you can be able to enjoy the same. You can also be able to enjoy and provide payment instruments as Qona. You will have a Qona branded checkbook, a Qona Sacco branded ATM card. Because you are participating in the national payment system, you will be settling monies like ETC. Do you know right now, if you are being paid a check or through the bank, somebody has to go deposit money to a bank, give that instruction to Qona Sacco to now implement or update your member records here at the Sacco. So what this is, the secondary Sacco being brought about by this bill, is to offer the shared services that I've just highlighted here for us as members to understand what the shared services is all about and what the central liquidity is all about. So the liquidity is to facilitate movement of money between SACCOs and inter-SACCOs. And then shared services is now all about the technological platforms where can facilitate the payment infrastructure, instruments, etc. for you as members to be able to enjoy. What does participating in the national payment system mean? It means you have the payment infrastructure I've talked about, RTGS, EFT, PesaLink access. Right now, the way PesaLink is set up for most SACCO members, you can only pay out to a bank. There is no one whose plane can send money back straight to your FOSA. So what this will mean is you can be able to receive and pay through any of the national payment system currently happening in Kenya or even internationally. You can have checks, you can have cross-border payment intermediation and such kind of stuff. What is happening today will cease, because right now Qona Sacco will need a commercial bank sponsor to offer any of those services that they are currently providing, apart from the mobile banking, which is your own. Any other services riding through a commercial bank sponsor. So these are some of what this new bill is going to bring. What you may not know, members, is because the Sacco cannot provide you with value-added services to make payments and receive payments from other financial players within the country. Many SACCOs are bleeding money every single month. This may be happening here in SACCOs, and members, if this has happened to you, please give me a thumbs up. Anytime you borrow a loan and it is funded into your FOSA account, the next thing you do is you ship that money to your commercial bank account, either through RTGS or through M-Pesa, or you come and say, why? Because you feel the bank is giving you more value and you can transact at whatever time with no limits. If you have experienced this, please give me a thumbs up, so that I am not speaking of things that are being built in the air. It's on reality of what we are going through. Why is this happening, guys? It's because as SACCOs, we don't have the facilities to be able to make you enjoy financial services at the SACCO. Yet, it is a SACCO where you have saved, and it's the borrowing that has given you this money. So those limitations are going to be addressed by this secondary co-op that is being brought about by this amendment bill. So what benefit will this have? Every time this money is shipping out of Qona Sacco, but when now you can transact, members, niambieni tu kweli, would you still feel the need to send money outside of Qona Sacco if you can be able to enjoy the same benefits you're enjoying at your NCBA account or at your ABSA account or at your Equity Bank account? Now, we need to be able to look at ourselves. What is the next level as a movement? And this new bill is coming to bring about a mechanism for us to be able to enjoy the services as SACCOs through an entity that we as a movement fully own, not a limited liability entity, but this is another cooperative that is owned by members and is able to participate. The other thing that this bill does is expanding SASRA's capacity. Currently, it's doing licensing, it's doing capital and liquidity for only the licensed SACCOs. It is doing supervision for the SACCOs under them. Do you know right now even SASRA is approving board and senior staff? So one of those expansion is now the approval of the board and senior staff for the secondary cooperative, because the 2008 bill gave only two powers to SASRA: deposit taking SACCOs or specified non-deposit taking. Now it has expanded to any cooperative that does shared services and liquidity. So it's going to be able to set regulations. It has enforcement powers. It is also going to oversee what kind of investments that this secondary cooperative can do, and is also going to provide operational guidelines that shall guide the form and shape and the governance of this new entity, how it should work. But the difference is now, ladies and gentlemen, is that no other entity that handles member money can operate outside the purview of the regulator, which is SASRA. Now, what are some of those teeth that the SASRA has been given? If you're non-compliant, you will be paid up to a maximum fine individually, up to 3 million for non-compliance, and you can be imprisoned up to 5 years for non-compliance. So there is now, with this new bill, a stricter governance code of conduct. SASRA will have to vet through a fit and proper testing for every person who will either a delegate or a leader in this cooperative, a secondary cooperative, or any member of staff. They have to be vetted. They have to apply as directors and as staff for them to be approved and allowed to take those leadership responsibilities. And as you can see now, the regulatory powers to approve the business has been expanded. Now, the third thing that this new bill does is protecting depositors. Now, let me give you a backstory. In 2008, this act talked about a deposit guarantee fund, but nothing happened about it. There were no regulations or a framework for it to actually come into play. So what simply means, all of us in the Sacco movement, I'm a member of my Sacco, and I have been a leader in my Sacco as well. All our deposits, as is currently set up at Qona Sacco, at any Sacco in this country, there is no safety net. Banks enjoy theirs through the Kenya Deposit Insurance Corporation. Insurance, I'm sure you are a policy holder. There's something called a policyholders compensation fund. That is a safety net for premiums and such kind of things within the insurance space. We have never had such for SACCOs. Now, the law talks of up to a limit of 100,000 per person, subject to allowing offsets against outstanding loans and such kind of things. Do you know, between 1989 and 2020, the Deposit Insurance Corporation was only covering up to 100K for bank accounts as well. It only moved to 500K just during the COVID period when it was starting in 2020, after a lot of lobbying. Right now, they are discussing of increasing that limit as well. I appreciate, and this is now where a lot of conversations has happened, that it is little. From where I sit, it is a starting point. And as a movement, we can be able to, because it is still in a committee stage in Parliament, we can lobby for something bigger than that. And I'm looking forward to how the movement will handle those conversations. So right now, the Deposit Guarantee Fund have a board of trustees whose chairmanship is being proposed to be a presidential appointee. It will also have either the Treasury Principal Secretary or their nominee, Cooperatives PS or their nominee. It will have the CBK Governor or their nominee. It will have 4 representatives, 2 from either gender from the cooperative movement, which have to be gazetted by the Ministry of Cooperatives. The CEO and the board chair of SASRA will also sit in that board of trustees. Now, where is the change happening? Because a lot of conversations and misinformation has come from this Deposit Guarantee Fund. The change has been, in the old law, the chair of this guarantee fund was supposed to be from member SACCOs. The movement was supposed to elect its own chair. But this amendment bill is saying the chair of this fund needs to be a presidential appointee. That is where now there is a bone of contention among the movement, and many have really talked about, the government wants money from the Sacco space. But I can assure you there is nothing about the National Infrastructure Fund or government accessing member funds. It is nowhere in the bill. This board of trusteeship is only covering the Deposit Guarantee Fund, which is Sacco Statuts Act Section 56. Nothing changes how Qona Sacco operates. You as members still have full control over electing who your board members are, who your supervisory members are. You retain full control of your money, both in the Sacco and in the secondary co-op. This Deposit Guarantee Fund is simply acting as an insurance, and they will issue guidelines to say how much percentage should Qona Sacco contribute towards the fund, so that in case of a problem, then member funds are safeguarded and protected. So this is, I just wish to be able to bring clarity on where the controversy has been, and a lot of misinformation around this conversation has happened, and I'm happy to take questions at the end of my presentation to just bring more clarity. So what does this bill do and what does it not do? The reality, it creates a CLF where 30 plus societies join. It operationalizes the Dormant Deposit Guarantee Fund up to 100K. For starters, this should be able to improve. This bill is expanding SASRA oversights and is making reporting mandatory. So there can be no Cusco-ish kind of a thing, because Cusco operated without any oversight. Then it opens a path towards Sacco members participating in the national payment system, either through cards, checks, etc. What does it not do? It does not transfer your deposits to the government. There is no such framework in this bill. And no one can touch your member funds because it is protected by law. It does not end Sacco independence. You still elect and control your money where you are. It does not fund national infrastructure from your savings. Member savings are local to Qona Sacco, wherever you are, and it is meant for lending to you as a member. That is not changing, and there is nowhere in the bill or any bill before Parliament that talks about that. And lastly, it does not force Qona to join anything. Participation in the secondary cooperative is absolutely voluntary, and you guys are the ones who make that choice to be able to move forward with it or not. So the bill strengthens and protects the Sacco, and it doesn't take anything away from you, and you joining it is purely your decision. So how is the regulator and the operator work? This secondary cooperative will manage the CLF. It will be able to lend to the primary SACCOs, those only member SACCOs. It will support inter-SACCO lending between the steamers and the Qona SACCOs. It will build and run the technology infrastructure. It will issue payment instruments, and it is fully owned and operated by member SACCOs. If Qona SACCOs joins today, you will elect a delegate to represent you in that secondary COP, and they can stand a chance to be elected to be a board member. Where I stand, it makes a lot of sense for Qona to participate, and in fact, if Qona does participate, one of your delegate should be in one of those board members because of the good work Qona Sacco does, especially in championing new technologies within the movement. But that is my personal opinion. So the regulator is restricted to, he's not a player, he's a referee, to only the legal framework, to only licensing, to oversight, reporting, and supervision, where it can do spot checks, and to oversee the deposit guarantee funds, where it is simply the Sacco safety net. So the secondary cooperative is the player, and because we're in the World Cup mood, I was not happy France lost yesterday. I'm hoping England will win today. The secondary cooperative is the player. SASRA becomes the referee to ensure there is fairness and that member funds are protected through and through. So in a nutshell, ladies and gentlemen, that are the key areas of what this bill does. And I want to quickly go into what are some of the concerns we have received, and what does it actually mean for you as members. And at the end of it, we'll be able to see from your Q&A whether I have addressed this already or I need to speak into it. So where are we? As the bill stands, it's at the committee stage. It was gazetted last year in June. There was a first reading in April this year. And now it is at the committee stage. And as at 9th of July, they issued, as per Article 118 of our Constitution, there must be public participation, and it is an opportunity for SACCOs to still engage through various channels, either writing memorandum to the clerk of the assembly, committee appearances, talking to the umbrella bodies, SASRA, Cooperative Alliance of Kenya, to be able to have one coordinated position. So as a board at Qona, it's important to have one coordinated position to represent your member interest. But then more importantly, where I sit, the movement needs to speak with one voice. What do we need to do? So before it goes to the Senate, can we engage and say we have an issue with any influence either from the government, or when it comes to investments, we want to be able to have what? A say in what is acceptable to us. So will there be need to tweak existing legislation for the secondary co-op to work? Absolutely. The National Payments Act, the CBK Act, guides who operates on the national payment framework. So if we are to issue these instruments, it has to be under CBK's oversight and compliance of their rules. If we are to have RTGS available to us, how are they operating? What reporting? What technologies do we need to have at Qona? So all these conversations will have to be aligned. We expect CBK to set entry conditions. We also expect SASRA to give us further guidelines and regulations to not only guide on the secondary co-op business, but also on the deposit guarantee fund. Then it is important for members to appreciate there are two bills which are currently ongoing and are in parallel. We have discussed today about the second Sacco Societies Amendment Bill of 2025. There is another cooperatives bill which is being done to revise the dormant and old Cooperative Societies Act, CAP 490. So there has to be alignment throughout every regulation that will be able to make this secondary cooperative work for us to be able to do what? Participate in national payments and be able to enjoy a central liquidity facility for inter-Sacco lending, and for us to be able to actually offer value-added services to Qona Sacco members and any other Sacco member in this country. So SASRA will issue subsidiary regulations. So once this bill passes, then it gives SASRA the legal mandate to go ahead and issue regulations. We look forward to seeing what those regulations will say. We look forward to seeing what those guidelines will say. We're looking forward to any advisory notes which will come to speak into the regulatory framework or into how the business of this secondary co-op will operate for us to be able to enjoy some of these services. Now, it is important for us to be able to understand it is voluntary for any Sacco to participate. This is a Sacco member-driven initiative. It is supported by development partners, but it is an initiative of the movement. So it is up to Qona to say we want to participate. So it is voluntary to join. You can be able to opt out, and you can also refuse to join. And because it is a member-run entity, I want members to appreciate that it has to be funded by the participating SACCOs, either through subscriptions or through contributions, and any returns that come of it, are you plowing back? The same way you have an AGM and you say out of the profits shared, we want to get 10% as dividends or 20% as whatever. Even in this secondary entity, because it is a cooperative, it will go through the same AGM framework where these decisions are going to be made, including where is the money going to be invested in. So it's absolutely important. Now, one thing I wish to note is this. The bill talks about a secondary cooperative. That means there can be multiple. At the moment, it is 30 plus primary SACCOs. We do not know during this committee stage conversations, they may either bring it to 20 or increase it. We're waiting to see. So it can be important for us to appreciate that multiple of these secondary cooperatives can be formed. But it is important for us to also note, it is explicitly done, and it should be a red flag. You cannot be a director in secondary cooperative A and become another director of secondary cooperative B. This bill is very specific on you can only be in one. And even in the deposit guarantee fund, none of the board of trustees who represent cooperatives will be a Sacco director or in management, or would have done business with Sacco. So it's simply going to be looking at industry players who are not leaders, who are not directors in other spaces, to be able to lead such kind of movement. So this is just on how we can participate, etc. Now, on shared systems, the SASR CEO made a presentation before the trade committee that says 80% of the small SACCOs cannot afford best-in-class technology. So one of the mandates with these shared services is this secondary cooperative can invest in Some of you guys are technology people. They can invest in a core banking infrastructure or a mobile banking USSD, and then smaller Saccos, not Qona, can be able to plug in, enjoy quality systems without the capex, the capital expenditure to invest in buying. Qona Sacco is privileged to be a tier 1 Sacco. They have the resources. You can buy the best in the market and offer these to Saccos. So it was prudent, Waswahili wanasema haba na haba hujaza kibaba. So because now we are pulling these resources, it is possible to invest in a quality system that can be participated in by the ones who cannot afford. So who owns these technologies? Members own them. You control the systems, not the government. Who pays for it? Members pay for it through fees, contributions, not the government. Development partners currently are supporting this initiative because for it to start, it requires resources. And because we are yet to buy into it, the development partners are sponsoring this conversation, the creation of this the law, probably the initial investment to buy the system, but I don't have the details of what extent they are, but I know that the World Bank is participating. FSD played a key role in this conversation. So they are paying for it, but the ownership will remain with the members. And because of now we are talking of an industry-wide technology investment, then security becomes a really important thing. Things to cover security standards, incident response, BCP, business continuity plan obligations, insurance, indemnity liabilities, etc. Those have to be discussed. And because Qona Sacco is known as an industry leader in technology, it is important that you guys speak on what some of the best security infrastructure should be, so that then we can be able to take into consideration. How about investment governance and safeguards? Now, it is important then to be able to, the board that shall be elected to participate in their fiduciary duty, to do business in line with prudential rules, to be able to ensure that there is independent oversight and not trust in individuals. Because this bill is giving SASRA tighter prudential supervision and controls, that means even investment decisions have to be vetted and overseen by SASRA. So no one will be caught by surprise. Now, I want you to appreciate, members, that your primary deposits still stay within your Sacco space, only within Qona Sacco. Any contribution you make to the secondary corp is what now can be used either for investment in the technologies or to do inter-Sacco lending, etc., and any surplus in other types of investments. So it is important that there are very important investment policies which are written to guarantee the concentration limits which are comfortable for the movement. There must be an independent investment committee recommendation. The Sacco, they need to make such recommendations. And it is important for member Saccos to ratify such mandates, and that any investments done should be done in a transparent manner, and regular reporting must be done to the membership and also to the regulator. I want you to appreciate, members, that only what Qona Sacco approves to be placed in the CLF is ever what is going to be within the purview of the decisions that the secondary cooperative does or the deposit guarantee fund does. Remember, the deposit guarantee fund only shall be levying a percentage, a 0.something% of your deposit to be able to invest, to build the capacity to be able to safeguard member funds. Now, there has been a concern in as far as the presidential appointee to the deposit guarantee fund. Now, the DGF is a systemic public interest backstop, and it is likely the proposal was modeled around what the Kenya Deposit Insurance Corporation does or the Policyholders Compensation Fund is doing. Those two are state corporations where the chair is a state appointee. So the modeling is around state corporations, but the creation is for the movement. So the concern is that this political appointment risk independence for the Deposit Guarantee Fund, whereby they can be hired and fired at the will of whoever is sitting at State House. But a neutral fund shouldn't work that way. And I think it is important for the movement to be able to speak with one voice and say, we have expertise within the industry. We can nominate our own who has the necessary experience, expertise for a fixed term, who can be able to oversee the Deposit Guarantee Fund. Because this is under conversation, then there is opportunity for the movement to speak with one voice as far as that is concerned. I think it is important, members, for me to state there's a lot that has gone on about the infrastructure infrastructure fund has no country, and this bill is simply talking about a secondary entity whose responsibility is to offer shared services for the benefit of the movement and to actualize the Deposit Guarantee Fund and expand SASRA's powers. So what should SACCOs push for, in a nutshell, as we wind up? Higher or tiered Deposit Guarantee Fund cover. Board independence of the Deposit Guarantee Fund, extremely important. You want the secondary Sacco, which will be running the central liquidity facility, to be fair in everything that it does. That can be done through a very able governance structure at that level. So whoever then we elect should be able to speak on behalf of Qona Sacco and every other independent Sacco. Number 4, there must be clear exit rights. If Qona Sacco is not happy, they can be able to exit without any cumbersome processes. Number 5, there must be very strict data and cyber standards, because now we are talking of technologies that will operate not only in the national payment framework, but also in the international space. And lastly, there must be transition support which is adequate. And here I will blame the movement. As a cooperative movement, we are terrible in our communication. Every time we are caught flat-footed because misinformation goes to the market. So what we do as a movement is coming to try and clarify the correct position. As a movement, we need to change strategy and be proactive and not talk through through press conferences and whatnot. We need to be able to speak in the language that the public understands of what we are doing as a movement. And this can be a lesson for Qona Sacco. We need to only stop just communicating with members on what we are doing. The public needs to know, because even if the public are not our members, but once they know Qona Sacco is doing well and Stima Sacco is doing good things, then already we are controlling the narrative of what we are doing as Qona. So that then it will be a cascading effect. Qona speaks, Stima speaks, Mwalimu speaks, Port Sacco in Mombasa speaks, Imarika in Kilifi speaks. Then it creates public confidence around the movement. So for so long, we have only restricted our conversation and communication to members. I believe it is time, and this should be a wake-up call to us, because those who went to the public went with the wrong information and created a lot of panic, unnecessary panic. And I think it is time for us to be able to actually take advantage to communicate better and then build the capacity. I want to commend the board for inviting me to just break down what this bill is all about to you as members. Let us make it more common to be able to speak about all these things. As I wind up, ladies and gentlemen, Qona Sacco is not changing today. It's simply the systems around it that is being changed. The bill does not touch your deposits or your savings or how you're borrowing. It is simply building infrastructure above you. A shared liquidity fund, tighter SASRA oversight, payments infrastructure, a deposit guarantee fund that is supposed to make the entire movement more resilient and inclusive. I want to encourage, and I love Kenyans, we are not sleeping. This noise is simply an indicator we are cautious about where our money is going or who wants to touch our money. So I commend Kenyans for all this. What I encourage members is confirm any public information before reacting. Seek that document, read it for yourself. Be cautious of sensational pronouncements. Double check, validate. Number 2, reach out to your Sacco members, management. Talk to your board for clarity of what any information you get, what it means for you, so that you can actually get clarity from the horse's mouth. And lastly, this is to all of us as Kenyans, let's stay vigilant. Remember that your awareness is important. So continue being aware of the changes to what is happening in this country as far as legislation is concerned, any bylaws or any regulations that will come into play that may affect you or your money. When SASRA releases these guidelines and regulations, I am happy to have a conversation with your legal team and your board to demystify and break it down for you to be able to understand it better, so that it actually makes sense for you on what the reality is all about. And with that, ladies and gentlemen, Ashe Oleng. Where I come from, Ashe Oleng simply means thank you very much. You have been very diligent in listening. I am now open to receive any questions, any concerns from any one of you to be able then to make it clear for us all. So thank you very much, and I hand over the meeting back to the Sacco team.
a member by the name of Juliet Mweke has asked a question regarding saying that does SeedQ have an age limit?
No, it doesn't have an age limit. Comes in regards to the eligibility and the ability, the amount a member is supposed to contribute is what segregates the bucket. So it doesn't have an age limit.
Okay, thank you very much. The other, I think there's a question from Edward Nyambu, still on the SeedQ. For SeedQ, what is the process for accessing loan facility?
Same process, the loan requirements still remain the same in regards to if you're in employment, you still require your payslip, a certified payslip for 2 months or 3 months, depending on the amount you're borrowing. We'd also require for your certified bank statements if you're in business. So the same loan terms still remain. It's only the amount you're contributing is what differentiates you from one bucket to the other. So the loan documents that are being required for loan application are on our website. You can be able to download them and you'll be able to see the exact documentation that you require.
Thank you very much, Judith. Very well. So we'll move now to the questions relating to the bill in the interest of time. So just to see that actually there's so many questions here from members, and this shows that members are actually actively participating, and it's good to highlight some of the key questions that they've been asking. So let me just pick a few questions. Chairmanship appointment by the president. So there's a question from Charles Kabaiku. What are the powers of the chairman so that they need presidential appointment?
Thank you very much. Let me know if you can hear me by a thumbs up. Okay, thank you very much. So the responsibility of the chair of this deposit guarantee fund is simply to, one, make investment decisions for the funds which will be available, and also oversee the duties and responsibilities of when a Sacco fails, how do they go about into the payment? Do they need presidential appointment? That from where I sit, it is not a must. I believe the movement has capacity to manage that. But there is somebody who has mentioned here, I don't know if I can get his name, Arnold Ndukuyo, about the independence of deposit insurance agencies. It's extremely important that they do not become political appointees, but there's a competitive process through which such a position is actually assigned, or a competitive process where whoever becomes the chair is appointed, so that it is devoid of politics of the day and such kind of things. So I believe this is, because it is at the committee stage, then the movement needs to push back strongly. And I want to state this, it has not passed yet. It is at the committee stage. And the parliament issued a communication as late as last week. So there is a lot of room for changes into what the movement needs. And I think that is a sticking point that needs to happen on the amendment from a presidential appointee. But it is important that the movement speaks loudly and comes out strongly to make sure that there is independence of the deposit guarantee fund.
Thank you very much, Mr. Sane. There's a question, I think it's a general question here. It touches on several things. And that is asked by, sorry, I think I lost the person. Okay, yeah, the general question is, what is the greater benefit with this? That is from Vincent Anyanje. What is the cost-benefit analysis of this bill? What value does it introduce at the end of the day? What has failed in the current status quo? Is it really necessary? Is it worth the effort?
Okay. I'll give you my personal opinions on the same, having been in the industry for close to 2 decades right now. If we are to really talk about financial inclusion, then what this bill does, especially on the shared services and central liquidity, there is a lot of value for the movement, and especially members to benefit from them.
Now, for the cost benefit analysis, I am not privy to the feasibility studies that were done prior to this bill coming
the feasibility studies that
because
were
a lot of
done
what has
prior
happened
to
in the
this
last
bill
few
coming
years.
into play.
And
Because
I
a lot
would
of what
love
has
to
happened in
have
the last few
oversight
years,
on that, then I can
and
be
I
able
would
to
love to
speak
have
into the cost
oversight on
benefit
that, then I can
analysis
be able
from the financial sense.
financial
Is
sense.
it useful? Is it valuable?
Useful? Is it
As a
valuable?
practitioner, as an
As a
expert,
practitioner,
yes,
as
it
an
is.
expert,
And
yes,
why am
it
I
is.
saying this?
And why am I
It
saying
is
this?
important
It is
that
important that
any Sacco member in this country, whether
whether
it
it
is
in
Turkana,
Turkana,
Lokichogyo,
and they have their little savings and they want to transact and they only feel comfortable having an account with a Sacco, they should be able to enjoy the same financial services benefit like any other person who can have a bank account. Right now, the movement has almost 8 million members within the purview of SASRA. Then if we're able to bring about those in the deposit-taking space, which accounts for more than half, to be able to enjoy banking services to the full as an equal participant, I think that is value for the movement. Will it pay off in the long run?
Only the math can be able to tell that. But I think we need to do it prudently.
I think
we need to be able to ask these questions to the proponents to be able to get
these
numbers
to the proponents to
we
be able
can
to
actually
get
vouch
these
for,
numbers
so that then
we can actually
as
vouch
members of
for, so
Qona,
that
you can make a good
as
decision.
members of Qona,
As
you
the
can make a
board
good decision. As the board
the Sacco,
of
you
the
can make a good decision.
you
when
can make a good
the,
decision when these
industry stakeholder engagements are done, so that then it is done in the correct way, and that it is for the full benefit of the Sacco members.
So I think there is value. But the movement needs to speak. The movement also needs to see this value for them to be able to vote for it
and say, we want to do this. So I can only speak on an opinion.
So I can only speak on an opinion, but the decision makers is actually the movement, which is you, the members.
Thank you very much. The other question is from Christine Washira. She asked, why was it deemed, Mr. Sane, you're talking about primary and secondary cooperatives?
Yep.
And then, so Christine Washira is asking, why was it deemed necessary to have secondary cooperatives? Couldn't all these things have been done through the primary circles directly?
Okay. The short answer to you, yes, the primary circles can do this. But the question is this. How many of the primary circles have the financial muscle to be licensed or to be under CBK? It would mean we need to have similar capital ratios. It means we need to have systems that are like banks, and that is an expensive venture. So in as far as yes, in the primary circles can do that. But what that will only do, it will only open the benefits to the members of that individual circle, which will have been able to join. So if only Mwalimu Sacco has a financial muscle to join, only their members will. So this secondary circle is simply economies of scale. We aggregate, we all contribute towards it. Then if this participant can be able then to have the financial muscle to comply with CBK and play in that space, then every participant primary circle and their members benefit the same. So it's simply an economies of scale thing. And it is easier if we contribute to be able to achieve a bigger goal, which is industry-wide.
Okay, thank you very much. I think let me read the next question from various members here. I think there's one on, most of these questions are kind of similar, but allow me to just pick the unique ones that will add value. Okay, there's a question there's a question by NM who is asking, how does this new law mitigate against the Cusco kind of scandal? Yeah, that's a very important
Okay, that's a very important question. And there's also another Frederick at Q&A talks about the CLF visa. Now, let me just quickly talk a bit about why Cusco, what happened. Cusco initially came about as an advocacy arm. And then when they realized there is a funding gap within the movement, they started collecting deposits and also lending to primary circles. The problem came in, Cusco was operating as an independent entity with no oversight, not answerable to anyone. And any time you handle such kind of monies, Same way at Qona Sacco, if there is no proper oversight, then somebody can mess around. And that is what happened with Cusco. The theft happened because no one was asking Cusco for their records, who was auditing them, who had regulatory powers to hold anyone to book. So this bill is simply bringing a remedy by expanding SASRA's oversight to secondary corps as well. Cusco is a secondary corp. So if Cusco ever wants to handle Sacco money, they must be, first of all, licensed to be able to do the thing. Then, Frederick, to answer you, it is optional. Again, it's important for me to state this again. It is optional for the Saccos to join this secondary corp. It's purely optional. You join it, then you enjoy the benefits that come with it. If you don't join it, the status quo remains and you continue doing business as is. Now, what you're asking about the new regulation creating unhealthy competition. So what is happening is, Frederick, to your question, 40 banks plus 177 Saccos, which becomes an unhealthy for regulators. In fact, if regulators they want a smaller number, it becomes easier work. So to cure this, it is why instead of the 177 Saccos playing this space independently, they simply join up to form a secondary 1 or 2 or 3 to be able to play in the CBK space. So instead of doing 40 plus 170, you're doing 40 plus 1 or 2. It's easier to manage from a regulator's perspective and to maintain a healthy competition. But what this will bring, ladies and gentlemen, is if all Sacco members can be able to participate and do business as any commercial bank account, then it's only going to make the cost of banking cheaper because it is accessible to all and they cannot hold anyone to accountable. And why? Because it is a secondary corp. So it is simply primary societies elect their representatives to sit in the governance bodies, and hence the secondary corp can only operate through a delegate system. Again, only the secondary cooperative. Primary Saccos, you are at will to choose and make decisions on your governance responsibility. So let us not confuse between the two. Only in the secondary corp, because they'll be dealing with many Saccos, then not all board members from all Saccos will sit in the governance. So they will select representatives who will sit in those governance structures to make decisions within the secondary corp. So this bill will cure any secondary corp to misbehave or to play by their own rules. Rules now will be set for anyone to play within the finance space. They must be regulated by the authority. So that is where now the safeguard comes into play. Okay. There's somebody else, Catherine, you asked, who are the specific stakeholders who were involved and came up with the idea? Who decided there's a problem that needs to be solved by the secondary corp? These stakeholders were our Saccos in these industry forums, whereby these problems were discussed, etc., and there was a need to be able to then, what solutions do we have? So the industry stakeholders are the Saccos under SASRA. It is the ministry, it is SASRA itself, and then it is these were supported by donor agencies to have this conversation. So those were the stakeholders who are there. Dennis, you're asking, I understand this is still a bill, meaning it is proposed law and not yet passed? Yes, it is still a bill. It is still in the committee stage, and there is time to make comments. And some of the things I'm seeing from your members here, it's very encouraging. I think it is important for the board to take some of those suggestions to make it as part of the memoranda to the parliament to be able to do this. Elizabeth asking, is it true that Saccos will be lending money to the government? No. This bill is to provide the secondary framework to lend money to each other. Any surplus can be invested in government securities, but it is not lending. The primary role, this bill explicitly, is to facilitate inter-Sacco lending and Sacco lending and a payment infrastructure for the Saccos to do business. Other than the positives of the law, NM, you're asking, what are the gray areas with this law introduced? Any risks we are able to consider? One is the governance risk, like where you're saying some appointees for the guarantee fund need to be government presidential appointees. That is a risk. That one is a gap. So we need to push back on the same, because we need independence in that body. Another risk is simply on a technology side. because now we are investing heavy in technology that will pay in both local and international sector, it is important that then we have the proper frameworks for security and data protection and data governance and such kind of things. So that becomes extremely important. From a governance perspective, I think it is important that it is representative of both the big and the small Saccos, because the 177 licensed by SASRA, there are giants who have 70 billion in assets, and there are small ones who only have 800 million in assets. So we need to be able to have a governance framework where it is fair across the board, so that then you're able to be protected. Then I think from me, lastly, would be from a legal perspective, then we must ensure, one, this bill is watertight to safeguard member funds. Number two, the regulations that SASRA will put into place must have very vigorous participation by the public, by the Saccos, so that then we make sure that there is no loophole for any entity to use this money wrongly, and that member funds are safeguarded. So it is important that because it's still a bill, then we ensure that we cover any legal or constitutional risk that may come up about into why we are here, and so that then your funds are safe. I don't know if I've answered all questions. If there's any other burning question, maybe somebody can raise a hand. I can look for it. Somebody saying, when member funds are pulled to a COP, does that create a layer of bureaucracy when a member wants to access their funds? So this is what's happening. This additional one is not touching member funds. Your member funds are with Qona Sacco. So your bylaws, your policies still play into when you want your money. The bureaucracy will simply come into if Qona Sacco joins and wants to exit as an entity, there's where bureaucracy comes in. But your member funds remain locally at Qona. Please confirm whether the new proposed amendment affects the interests or management fee rates currently being offered by Sacco. None at all. Your products, your services, what the CEO was talking about earlier, that maintains and remains at Qona. I would also like to confirm that a registered person is currently available from bank to Sacco, and it is only a few Saccos who have made the technological investment to talk with IPSL to do both incoming and receiving funds. A majority of Saccos only enjoy PesaLink one way, those who already have. So this one is only a few Saccos who can enjoy. If you go to PesaLink and see Qona, you'll probably see Steamer and maybe one or two other Saccos. But a majority of Saccos only enjoy PesaLink payment one way. So yes, I acknowledge only a few can be able to enjoy back and forth. Majority only can enjoy one way. Does this bill allow Saccos to venture into investment outside the country? No. Absolutely not. It does not allow for that. So investments will be restricted within the country as at now. If we are to open this up, that would require a whole big conversation about the regulatory requirements and exposing member funds to the international markets fluctuations. So at the moment, we don't have capacity to be able to do international. So the secondary corp does not do international, only do local. The only thing it will be participating internationally, it's only on the payment space, nothing else. So the secondary corp is going to take roles currently being offered by Corp Bank? Yes. Does it mean Saccos are going to save on expenses? Yes, especially on the services that you're currently enjoying being sponsored, not just by Corp Bank, by any other bank. So when you are able to offer it as a cooperative movement, yes, the charges will be much lower because you are part and parcel of the process as well and not at the behest of another entity. How will the secondary corp run? Who appoints the management? What is the extent of the responsibility and power that is different from SASRA? SASRA will be playing the regulator, covers the entire business. This secondary corp will only be responsible for the business of what we have talked about. Central liquidity, payments, that's it. And who appoints the management of the body? Primary Saccos will elect delegates who will elect a board to run this secondary cooperative. Then if they have a management, which they'll have a CEO and staff, then that board will recruit a CEO who will be responsible for running the same way Qona Sacco has a CEO and staff, that secondary corp will do the exact same thing. I think I've answered that mandatory. Okay, I've answered about Cusco. Will the Saccos contribute to the secondary cooperative? Yes. that contribution will be dictated by subsequent legislation. Will it affect forthcoming dividend rates? No, because that investment is not a cost. Any monies you are contributing to the secondary Sacco is not a cost, it's an investment. And you'll only be doing it from surplus funds. So it will not affect the dividend rates that the Sacco will pay, because it is out, the dividends are paid out of the business and revenue the Sacco generates. Does the secondary Sacco mean my monthly contribution will have to increase? No, remains the same. What problems are there with the old law that now necessitates board chair to become a presidential appointee? That one is only on the deposit guarantee fund, and it has been non-existent. It's only on paper. So now this is just a framework for it to be operationalized, and there is still chance for the movement to stick a claim to how they want the leadership of the deposit guarantee fund to be in, and that one is subject for confirmation. Okay, there are too many questions. I don't know if I can be able to answer all of them at the same time. Okay.
We can pick one or two more.
One or two more. I don't know if there's another burning one. How do we reject right now? The public participation channels, writing a letter to the clerk, through your representatives, through the board, through the apex bodies, to be able to have one voice. All those channels are open for you to be able to either vent your concerns or simply say, we don't like it, we don't want it. So there is an opportunity for you to speak as at this point. So I think, ladies and gentlemen, I've answered quite a bit on as far as the bill is concerned. And maybe when that other bill is ready for conversation, we'll discuss with the board whether we can now discuss about those conversations. Maybe the last one is, how does the bill affect the current relationship with the sponsors? To be honest with you, I don't think banks will be happy that you guys can be able to issue your own cards or your own checks, and you can be able to clear them within the same number of days as a co-bank check or an Equity Bank check. It will definitely rattle a few feathers, but I think it's important that as SACCOs, we start playing in the big arenas to be able to bring financial inclusion, and we can be able to give this benefit to members. And Agnes, you're asking what is the interest of donors in this bill? I cannot speak of their interest. I can only speak of their sponsorship and support towards the feasibility studies that were done on the challenges within the space. How can they expand financial inclusion? So I cannot speak or know of their interest. I can only speak of what they have done to where we are right now. And I'm curious to see what the movement will have towards this public participation. So let's speak with one voice, because that's where the bill is at. I hope I have been able to address this factually on what the bill actually says. And we can be able to hopefully speak more as a movement to be able to have our voice heard and do things that will benefit members, Sacco members, directly throughout the country. So thank you very much to the board of Qona Sacco, management through the CEO, and to you members for listening diligently. I thank you all. I say again, Ashe Oleng, and I look forward to having these conversations more and more. If there are any further questions that maybe I have not answered, I will ask the Sacco to just compile it for me like a Q&A. I will respond each, and then I can send it as a deck that can be circulated to everyone to respond. So thank you. God bless you all. And I wish you and Qona Sacco success, growth. May you guys continually blazing the trail in the Sacco space, continually supporting your board, continue pushing your board for new things to come. I am happy to be associated with the Qona Sacco and seeing the good things you guys are doing. Speak louder, shout more. Let the public know that you guys are doing a good thing, and they can be able to copy your proper governance structures, the investment in technology to add member value. So I commend the board, I commend you members for supporting them, and I commend the management team to constantly pushing the needle on the Sacco environment. Guys, I am a strong proponent for innovation even before the law supports it. We need to be able to bring value to our members, and I'm happy what you guys are doing. So God bless, Ashe Oleng, and I'll see you soon.
Yes, thank you very much, Mr. Sane. Thank you very much. As I was saying, this is just an informative session to ensure that we sensitize you on the bill, and we're not pushing any of this proposed joining of things like the Central Liquidity Fund. Ours is just to make this awareness session for your knowledge. If there are any proposals in terms of wanting to have the bill amended before that, then the right channels are there so that we don't get ours. Before now, the bill is actually made into an act. And I think moving forward, we would like to really thank you for joining this session. I believe most of you have learned a lot from this bill, and because it's going to impact the Sacco industry and especially our Sacco. And from my end, I would like to thank every one of you for joining this session. And I would like to tell you kwaheri, and looking forward to see you in the next session. Thank you very much.